Hey, good morning, everybody. This is Dennis Wilburn with the Active Trend Traders. Welcome to How to Make Money Trading Stocks. I want to welcome everybody from around the world. And Mike, how you doing?
Doing good. Having some decent weather here in Texas for a change.
Yeah, did you guys get rain down earlier in the week?
It was supposed to be bad, and it turned out to be more of a sprinkle and not bad at all. So.
Okay. And I know my mom lives, close to Texas, over in Arkansas, where she retired to, and she was getting a little bit of bad weather. I think she gets more bad weather than you guys do in Dallas, though.
Yeah, possibly.
So let's get going today. I love to let you know that I can do presentations for any of your groups if you would like me to. I've got three really very good presentations: the truth about breakouts and the alternative entries, and then fish where the big fish swim, which is basically a little summary presentation about how well the IBD 50 have done since going back to 2007, and then a chat about the art of trend trading. So if you would like, if you have a group that you can put together, even it's like 3, 4, 5, 10 folks, I can link in and we can do a webinar, or if it's in the Bay Area, I can come out and do a presentation here. Hey, Mike, are you still planning perhaps to come out to the Bay Area in a couple of months?
Well, it's always up. It's always up in the air. I mean, my wife has to come to the Bay Area for work periodically, and at some point I may join her and just come out. I don't know. I have no concrete plans right now.
Okay. Well, if maybe we can try to schedule something for like July to come out, first part of July, for the Bay Area Moneymakers.
Well, that might be
And so, yeah, we'll probably do the Bay Area Moneymaker meeting in July on July 11th, simply because the first Saturday is July 4th, and so we won't have the meeting that day. So, I want to remind everybody where we were last week. The market was looking a little bit weak last week. It had just made what appeared to be a lower high. It appeared the rally attempt was failing, and it had basically rallied up and then fallen. This week, what do we got? Basically, we've been going from support to resistance from support to resistance. And right now, the market is basically drifting higher, and it appears that the buyers are winning. The S&P is approaching resistance after breaking through weaker resistance earlier in the week, actually yesterday. The NASDAQ is moving up towards its resistance zone that was put in place at the beginning of the year. And then we'll be looking at a little chart, and looking at the chart here shortly. And then the Russell, it is back to its upper resistance zone from the highs from the beginning of the year. But as Mike and I have been looking at this, it appears as if the Russell's momentum is really waning, and I think the charts will start to show us that. However, the trend is back in effect, and while the market is carrying a lot of baggage with it, it is still pressing and again drifting higher. And if the market was left to its own devices without any news from the outside, the markets always tend to have a slightly bullish bias that will drift it higher over a period of time if there's no other outside influences on it. That's normally the way it goes. So what are the outside influences we can be looking at for this week? And I've also been in effect for this week. One, earnings. Earnings get underway. Everybody and their brother is expecting the first quarter earnings to be really, really bad. And so I anticipate that the stocks that disappoint even more than what they projected out, if they adjusted their earnings downward, and if they disappointed at all, they're probably going to get slam dunked and hammered pretty badly. At the same time, since everybody's been talking about that, my question, Mike, maybe you want to jump in on this. My question is any bad news that could have come from earnings already baked into the market?
Well, my comment on this, I see the note here that you've got on your slide that the indexes are very news-driven and emotional, and that's absolutely correct in my opinion. I mean, one day bad news is good news, and this has happened recently, just in the past, this week, and then the next day bad news is bad news.
Yeah,
it's really unpredictable. But when you start talking about the earnings, I mean, obviously with the drop in the price of oil over the past several months, the earnings for the energy companies, the oil companies, are going to be poor. They're going to be negative for sure, and but the media is going to try to put some kind of a positive spin on it because that's what they do, and so they're going to say, well, yeah, earnings for the indexes overall aren't great, but that's because of the energy sector, and if you take the energy sector out of it, things aren't so bad, and I guarantee you that's how they're going to try to spin it, and then how the markets react to that kind of spin. Given the overall environment we're in, you may get a very positive reaction to that.
yeah.
So it's just really hard to call.
Yeah, it seems like, kind of like the more lipstick that they keep putting on the pig, the more we keep buying. And there's probably a lot of good reasons for that. There was a lot of movement this past week that was basically, or a little bit of movement this past week due to this thing of betting on interest rates. I mean, that just, somebody could almost stand up an ETF that was kind of like the VIX or something like that, and it would basically be designed to what's the interest rates going to do. Maybe they already have an ETF like that, but that is something that we just got to keep our eye on. I was looking at it. The interest rates now have been between 0 and 0.25% now for how many years? Since 2008,
They started in December of '08, so
yeah.
it's approaching 6.5 years. The Fed, and don't get me started talking about the Fed because it's hard for me to control my voice. There hasn't been an interest rate increase since 2005 or 2006.
Yeah, and
nearly 10 years, and historically, I mean, that's just crazy. That's just nuts.
And one of the things that's really interesting that I find about the interest rate thing is, in 2008, the interest rate, like to buy a new home or something like that, was sitting at about 6%, 6.5%, maybe 7%. And so they've dropped them down. Interest rates now are running somewhere between 3.5%, 4.5% on to buy a new home or something, or buy a home or something like that. So even if they tick the interest rate up by the end of the year by 0.25%, right? If that is enough to shake this market, where the market goes into dive condition, it makes me wonder about really the stability of the market. And I'm not going to get you started because I don't want you to say any bad words on the air. So,
well, it's not a very stable market, and certainly it's having let that interest rate situation develop to the point that it has for as long as it has. It's a real indication of the fear, I believe, on the part of the Federal Reserve in the economic recovery. I mean, if the economy can't handle a 0.25% interest rate rise, well, what does that tell you about their read on the economy overall?
Yeah.
Yeah, pretty weak. And in the face of that kind of weakness, to see a stock market that has tripled, or in the case of the NASDAQ, even quadrupled, over a period of 6 years is, incredibly discordant. And, that's what a lot of people, I think, potentially are beginning to wake up to. Unfortunately, the computers that are driving a lot of the trading these days don't see it quite the same way.
Yeah.
At least at least not yet.
And so, yeah, and I mean, we'll keep watching because eventually we will see something. Here's the percentage of stock above the 20-day moving average. This is the chart from last week. I want to just pop it up here for comparison. I modified it slightly and started using the candlesticks rather than the bar chart, simply because I think it gives a little bit a deeper not understanding per se, but it tells a very interesting story. As we saw last week, we had bounced from, down here about 47 up to about 65, and then we reversed. And so what we been seeing this week? Very interesting is this is the candlestick from last Friday. And then as we see, we got a up, down, stabilized, down, up. And I really thought, but things on this chart really haven't changed that much. As a matter of fact, if anything, from a stability standpoint, one would say as the indices is rallying back up to its old high, it is doing so with less of the stocks involved. This is NYSE. But some of those stocks do fall over into the S&P and the NASDAQ. As we can see, we're standing here below this downtrending, resistance line, and so in fact, fewer of the stocks are actually pushing or buying into this latest rally. I don't want to be overly negative, but at some point, as Mike was saying, the weight of the weight of the laggers, if the laggers continue to increase, will eventually, we don't know when, but will eventually pull down, the sprinters, the leaders, and it is a very indecisive market, and it's a little bit, as Mike said, it's a little bit crazy, and it's really been kind of a challenge to trade. Let's take a look here at. Let me see if I can get rid of that. There we go. So what I was saying, and this is intraday today, and while the market's making a nice little run higher today so far, this indicator, this index of the number of participating stocks has not grown, is not moving higher. Yesterday's move, especially in the Russell, appeared as if we were going into a serious sell-off. However, it rebounded off support and bounced back up, and so we'll see what takes place going into next week. Mike, you got any comments on this?
No.
Okay.
Not. It does sort of mirror the price action in the indexes, which even though we've been up, 3 or 4 days now, it's just kind of a sideways overall trend or trendless, and this is showing the same kind of thing.
Okay, so let's go to the charts. And I don't know if David Trujillo is on the line today or out there, but you will see something new on my charts. David Trujillo, I've been basically doing some validation and also some vetting, if you will, of an indicator that he suggested and mentioned to me the other day. It's called the Hull Moving Average, and I've been now utilizing that for a bit and are starting to adopt that into the active trend trading system, and I'm really pleased with what it's doing. So you'll start to see that on the charts, and what I will do is I will, in the Traders Report this weekend and the regular Art and Science of Active Trend Trading free newsletter, I will, if you are a Thinkorswim trader, I will provide a link so that you can actually link up and get this indicator and the settings on my charts this weekend. So, okay. Well, the market hasn't moved much since we came online, Mike. Here's the S&P, and the S&P, as you see, I was defining in the market update last night, we've got a couple of things going on. One is we've got price action moving in basically a triangle. And for now, prices will become interesting for potential trading opportunities when and if they get up to this level of resistance or back down to this level of support, with an intermediate level of support right here around the moving averages, the 8 to 20 and the 50, which basically are starting to look a lot like spaghetti, which, as we've mentioned previously, is what happens when the market starts going, or any indice and or entity goes into a sideways lateral consolidation. The moving averages start to turn into what we call the spaghetti pattern. This pink, is that pink or is that chartreuse? Okay, and this green line here, I'll get it a little bit closer, is that whole moving average. And I'm using an 8 period here on the daily, and I'm using, I think, a 20 or longer period on the weeklies. But as you can see, what it does is it, once it reverses, and prices drop below it, you get this chartreuse turnover. And it's been very predictive of, one, where the turning points are, and also providing very interesting early opportunities for entry and it'll put you closer to the stop. So we're starting to implement this into the active trend trading, and I think it'll provide us some earlier entries and help us stay with the trade longer once we get into it. So go ahead, Mike.
I have a quick question. Can you repeat, is your whole moving average on this daily chart the 8 period whole moving average?
Hold on. Yes, it is.
Okay.
And let me double check that. Yes, it is. And I'm using the open, high, low, close divided by 4. I just like that, and that's part of just, my personality when I've set up my indicators. I like that open, low, close divided by 4. Back to the chart. S&P, we're pushing up into this resistance zone that runs between 2100 and up to 2120. There's a significant, yes, the downtrending resistance line from the triangle hits out here at about 2110, 2111. And so it would not be surprising to see prices push go ahead and push up intraday at least to hit this area. And then we would be looking for a kind of setup similar to what we saw earlier in March, or latter part of March, where you get this big push up and then all of a sudden you start getting some bullish candles, or bearish candles. Looking at a longer term, on the weekly chart, we're still in the process of showing some negative divergence, or I would say waning or weak momentum on the weekly charts, given the level of movement that has happened on the weekly charts. In other words, our momentum indicators are not keeping up with this, and normally they either lead the way or, and so it's indicative of this kind of lateral horizontal move. So if a person doesn't like this downtrending triangle line, you can actually draw a line across over here. Just let that be your horizontal. And oftentimes horizontal support and resistance is a lot easier to identify than the trend lines, because the trend lines tend to be a little bit more subjective than objective, because and they also depend on the type of program you're utilizing for your charting. So that's what I'm seeing here. Basically, yeah, we may have free range all the way back up to this level, up into this resistance zone, and then we'll watch and see what happens. If we do get a breakout above this, 2110 level, then 2120 is probably in sight, and we'll just have to, see how much further we go than that. the NASDAQ itself. This is the NASDAQ 100. What's it showing us? The NASDAQ 100 is what I like about the NASDAQ 100 is working definitely within this horizontal price range from here and approximately from here. And we'll see if we continue to push up higher. This resistance zone at the top starts at about 44.28, runs up to this level up here, which is about the 44.79, 44.80 level. And so a break here would probably push us higher into the this area, the resistance zone. But what happens in the resistance zone will be, it will help us give us the clues we need to understand. Okay, do we need to now be looking at stock prices falling back down into this whole range as we move sideways? From a positive standpoint, similar. Yes, we do have the momentum that is still looks to be waning, but we also cannot neglect that one, we did get a bounce off the support from the moving average, and it appears as if true strength is turning around prior to the zero line, which could be deemed a show of strength, and the stochastics look like they are also turning up. One of the things that has been missing from all the indices this past week is just volume has been kind of mediocre. So, Mike, you got anything on the NASDAQ?
No, not really. Nothing that you haven't already pointed out. Again, it seems that at least for now, we're putting in a lower high, the NASDAQ, until proven otherwise.
Yeah. Now, if Mike brings up a very important point, if the prices get up and let's say into the 44.28 or stay where they are approximately, and we get a reversal pattern that starts bringing us back down, this area here would be that lower high, and then we'll have to see what happens when we get down here, because remember, the NASDAQ has already busted through this swing low to put in these other swing lows that are lower, and from basically the traditions of trends, lower low, lower high, and so we'll see if that that continues to work its way out. The Russell was interesting this morning so far. Is that the Russell puts in what is called, yesterday, puts in a hanging man at the resistance zone. And as you can see, it does not seem to be, it did not follow through the way the NASDAQ and the S&P did. You're welcome, Deb. Did not follow through and bust through this level of resistance here. And so while this was a big move, I mean, it bounced there off the 20, ran up, but that in reality is a bearish signal. And as we can see on the Russell, what do we have going on here? We actually have the momentum dropping below the zero line. And the TSI, which is also an internal momentum indicator, is basically just, it's slightly moving up. And so while the Russell was showing great strength over here when it ran up, showed some good strength to kick back off, but now we're starting to see that strength kind of wane. Same thing over here on the weeklies. Look at that. Stochastics, almost flat line. Negative divergence on the momentum, and TSI is also kind of flatlined and not making any progress. This is the one that's most telling to me, Mike. And if we break back down below these levels, and it starts hammering the 8 and the 20 over, then it would not surprise me to see us run back down to the 1240 or even the 1231 level. Yesterday's price action, I mean, it in the morning time, you take a look at the intraday. Take a look at the intraday chart on this. It had a major sell-off going on first thing in the morning. What you got, Mike, on this?
Yeah,
Make a few comments because I got to send somebody an email or a note.
Well, I mean, yeah, there was a big intraday reversal yesterday. I mean, there was some really intense selling early in the morning, and then it just, at some point, just got stopped in its tracks and turned around and reversed. And, you know, that's what a hanging man candlestick, you know, tells you, or at the bottom of a downtrend, that's what a hammer will tell you. And I'm not even sure what created that intraday reversal, except that, you know, again, a lot of the computer programs were kicking in at some point. And that seems to be what's driving things these days, from what I can tell.
Yeah, exactly. And
hey, when you get a chance here, Dennis, since we're looking at indexes,
yeah.
Because I think it would be interesting for the people who are watching to see this and try to develop some context around it. Can you pull up the chart for ASHR?
ASHR. I can do that right now. I might not be able to type it into the. There we go. Okay, you're gonna have to explain what's going on here, and then I'll follow us back up with the those other ones.
Yeah. So for those who are watching this, what ASHR is, it's an ETF. It's an index ETF for the Chinese, you know, specifically the Shanghai Composite Index. Anyone who read Dennis's, you know, active trend trader, the thing that you published on Sunday, which contained
Traders report. Traders
report. Thank you. I forgot the name of it. And there was a column contained in this past Sunday about what's been going on over in China. And this particular ETF is a really good reflection or mirror for the overall Shanghai Index, which has, you know, from its trough or its bottom to its most recent peak over the past 12 months, moved over 100% to the upside. This is, you know, this is what a bubble looks like on a chart. I mean, there's no question that the Chinese market's in a bubble, and there's also, you know, no question that bubbles can get bigger before they break. You don't know exactly when this thing is going to break, but at some point it will. And you know, it's hard for me to imagine that if the Chinese market at some point begins to break down, that, you know, some of the other major global indexes, including the U.S., aren't going to break down with it. You know, for now it's looking strong, probably too strong. And on another Chinese ETF chart, which is FXI, excuse me.
Yep.
It almost looks like an exhaustion gap setting up, but, you know, it still needs to be confirmed.
Yeah, it has not been confirmed yet. It looks really interesting, though, but I mean, and so I don't know how much, you know, Mike, you and I chatted about this earlier. I don't know how much of these gaps is due to it being kind of like an ADR, and so like in the trading time differences between the U.S. market and the Chinese market, but clearly, you know, again, huge volume on these last two spike ups. To me, that looks...
and that weekly candlestick, the way that's taken off this past week, almost looks like a buying climax to me.
Yeah, exactly. I mean, and so you know, at this point, I wouldn't say, hey, we need to short this and all that kind of stuff. And I want to thank Joe for sending along those ticker symbols for me to take a look at. But yeah, you just kind of, and Mike, you confirmed exactly, more or less exactly what I told Joe. I said, you know, that looks like an exhaustion gap. That does. I mean, you get a gap here. This is a breakaway gap because we're breaking away from a congestion period. And you might consider this a secondary breakaway gap. But when you start getting things like that, at least in individual stock entities, typically that's meaning the party is basically just about over, and the next step may be, I won't say a long one because we could do some consolidation down in this area here and then rebound. But the question that came along with this is between this and a 3-time leveraged ETF, which one provided, and Jorge, I do not know the inverse of the China Shanghai Index. And so.
Yeah, that's a good question. It's probably easy enough to Google that.
Yeah. And if anybody knows another hot international or market that's kind of going on right now, from what people tell me, is that the India stock market is really starting to heat up. If somebody has the ticker for the India, thanks, Mike. For India is, let's see.
Try INP, Dennis. It's an ETN, an Indian Index ETN.
Well, look at this. One of our members just shot this to me. This is Market Vectors India Small Cap. What was the one you had, Mike?
INP, which I think is more of an overall index ETF and not just a small cap.
Yeah, but it looks almost exactly like that other one, INDA. Oh, INDA was another one. That was the one I was trying to look at, think of earlier. Again, talk about like those are like peas in the pod, but that's not that big of a jump here. But it says India IDX. And what kind of volume does this thing have on a daily basis? Lots on a daily. And for Joe, basically, the other thing I saw that was the flaw with YINN, and we're going to get back to this is the 3 times leveraged on the, not the Shanghai Index, but the Chinese stock market, is basically, Joe, what I got to looking at, and this volume down here is poor. And so if I had to trade one of the two, I would look at the other, the FXI. It appears to be a much better trading vehicle. I'm not saying that it's a buyer, but it just appears like it would be a much stronger trading vehicle. Cool.
FXI is probably the most popular Chinese ETF because it's been around the longest, I think.
Yeah.
And so you're going to find, probably the best liquidity, and if you want to look into options, probably the best option chains on FXI compared to some of these other ones.
Yeah, because yen, its option chains were very, very skimpy.
Yeah, I believe that.
And Gino says the guys on Fast Money are pushing FXI.
Pushing it for what? To the upside?
Pushing it to the upside, Gino?
Yeah, that's CNBC. Well,
and
that's what.
And the answer to that is yes. So that's a good sign, right?
That's what they do. That might be a really good contrarian sign. Obviously, they're not looking at the chart, and they're not looking at how far away the price action on these charts is getting from these, even the short, quick moving averages.
Exactly. So, hey, let's wrap up the rest of the day's festivities. I hope you were taking a look at the charts to see how that whole moving average was looking. and noticing that it appears to be very predictive and timely. And so we'll be having some training on that with the active trend traders going forward. So I just want to remind everybody, here's what we attempt to do, and basically try to clarify, simplify, multiply, and follow the 5 pillars of trend trading. I want to highlight to everybody that we have a lot of stocks that are looking a little bit like IWM right now. Many stocks are looking like this, ricocheting between support and resistance, or ping-ponging between, since we've been talking about the Chinese stock market, I should say probably use ping-ponging rather than ricocheting, between support and resistance. The key here is be patient and wait until the support or resistance level are approached. It doesn't necessarily mean we're going to get all the way up to it, but I'm starting to lay in my alerts. My Claxon alert will go off here at about 126 or 125.90 to let me know I'm approaching these highs. My next set of alerts were going to go off just above the 20-day moving average. And my next set of alerts will be just above the 8-day and just above the 20-day moving average down here, which is just above this level of support. This is the intermediate weaker support, are not as significant support as what we have down here. We had the major turnaround with this swing low, but this is a definitely a level of support. And then my next one would be down here. I would put an alert here around the 50-day moving average, that if I approach that, it'll trigger, and then I can take a look at the chart to say, hey, here's what I need to do next. So look for reversal candles. Are the moving averages providing support or resistance? And this week, what was really interesting is for last week, the moving averages weren't providing much support or resistance. We were slicing through them like, a hot knife through butter, to utilize that old analogy. But then they firmed up this week, which was we sliced back down through it on Thursday, but popped right back above. So it's interesting how, I don't know if we should take that as a positive sign for more upside, or it's just the way it worked out on this particular week. And I think I will lean towards that's the way it worked out on this particular week. And then trade setups may take a few days to actually firm up. Again, we can get up here and bounce around in this 126 area, anticipating that we're at resistance, and we'll probably get a return trip at least halfway once it does its little bit of consolidation, or we see some dojis showing indecisions, that would return back here. So that's what I'm looking at, and just to be aware of that. And there's several other stocks. And so thanks, Debbie. I just noticed that, and I'll be taking care of that. Anyway, so that's what I'm looking at. Several of the others, like I said, several of the other stocks are emulating that same type of pattern. What else we got? Here's some of the, basically the highlighted stocks from this past week: YY, QIHU, Jazz. Both QIHU and Jazz did a really good bounce. Cyber, we're still keeping our eye on that. VDSI is starting to build a very constructive base. Tesla is actually coming back into play as a potential bullish trade. It made a good rebound, and it may be nothing more than just a run into earnings, but it's looking very interesting. And then Mike brought up a couple of weeks ago these two, one USO, if you're interested in trading the oil rebound, and it's 3 times leveraged ETF that emulate USO. This emulates, of course, the sweet crude futures, which is I think it's /CL and whatever month it is.
Actually, the UCO is a 2-time leverage, not a 3-time.
Oh, this one is?
Yeah.
Okay, it's a 2-time leverage. One of the things I want to highlight to everybody, though, that if you trade these and buy the entity themselves, the underlying ETF, that they are a limited master partnership. A lot of, like many of the oil-related entities, like the pipelines, that kind of stuff, are limited master partnership. And so if you buy the underlying entity, at the end of the year, you will get a 1099. They have to be reported in a special way. I'm not sure that extends to if you just buy the options. Mike, and I'm not going to pretend to know, that's something you need to be asking your accountant, because I know there are slightly different rules trading the options rather than the underlying entity itself.
Yeah, there are different rules. I don't know exactly what they are. I don't think USO or UCO as ETFs are master limited partnerships, so I don't know if that applies to them.
Well, I know a couple of years ago I was trading UNG, which is the ETF for natural gas, and, and at the end of the year, I received a 1099.
Interesting.
Yeah, very interesting. And okay. So it's worth, again, doing your homework, checking into the different entities. So let's see. So that's it for today, folks. It is not Easter this week. That was last week. So this is the one slide that I missed. So we will see you next week. Keep growing the egg. Thanks all for all. We had some really good discussion today and a lot of back and forth. I really appreciate that. Mike, thanks for being online. I'm going to be looking at a couple of charts here for a few minutes because I have to take my wife to the commissary so that we will have groceries to eat this weekend, and also do my taxes this weekend.
Have a good weekend.
Okay, Mike, thanks a lot. So, folks,
right,
keep the egg growing, trade wisely, trade profitably, and let's look at some charts. And I already said somebody came in. And Dorothy, you've got a lot of charts to look at, but I've got somebody who Aaron hit the street running first thing. I'm really, I won't say excited, but I'm really, I've been really impressed with this new whole indicator that we'll be implementing into the active trend trading system as a refinement, not necessarily change anything. The rules will be remaining the same, but I just want to, show everybody that it's this indicator here. This green line goes to. Is that chartreuse? Somebody who's a color person. Anyway, pinkish, and then when it bounces back up, then as long as it stays above that green line, you're in really good shape. And same thing over here. And as you can see, it keeps you in some trades for a long time. Get a rebound, turn pink for a couple of days, rebound. Again, so it's helping to answer a couple other questions that we were looking for. So let's move on. Aaron, where'd you go? Mobley. Mobley is on our list. Let's see how it's doing today. Are you already in Mobley, Aaron? It's called the Hull Moving Average. And on the daily, I'm using an 8 on the, and like I said, Jorge, if you're a thinkorswim trader, I will be sending the link, and I'm also using I'm using the 8 period, which emulates the 50-day moving average on the weekly charts. But again, like all the indicators and things that I try to use, like all the ones I try to use, they transition between time frames very well. So, Aaron, are you in? Yes. What are we looking at is basically depending on where you got in. If you got in on the bounce on the 40, you can stay with this trade. It looks like it's getting a little bit of movement coming up. Volumes, this whole volume here below the 50-day moving average on the volume is showing that this move is done with a little bit less momentum than you would have thought, and therefore to build confidence in this move here, you need some volume to kick in. That will then in turn take us probably up to the past high, and maybe even a breakout from this small little cup depression here. And when I say cup, I'm not talking about a IBD type cup, but it's just a little cup formation that can be on a, within, with over a few days. And so the two aren't interchangeable, is what I'm saying. So Mobley, that's what Mobley's looking at. If you're looking to get into Mobley, look for this bounce here off the 8-day, or it looks like it may be forming some support there around 42. Let's move along. EW, yeah, Edwards, Life Science. Nice starting breakout today on a bounce off the 50. Let's see if the moving averages, see if the volume kicks in. But this is a really great example of, you get this bounce off the 50, momentum starts to turn up, the true strength starts to move up. Now the true strength is still below the zero line, so this could be nothing. This could be nothing more than just a little peak up and then a drop until from the true strength indicator perspective, it doesn't become an official uptrend until it breaks back above the zero line. And if you go back and look at enough charts and enough time, that's a pretty good indication, because oftentimes if this is just a fake out rather than a breakout, what you'll see is the true strength indicator come right up here to the zero line, maybe pop its head above, and then drop back down. The other thing on the true strength indicator I'll just show everybody is pay attention to those 50 lines, plus 50, minus 50. Things tend to turn around more strongly at those levels. Here we go. Okay, ACTA. Am I not typing that in? AGVO. Sorry, Gina. I'm still not typing that in right. AGVO. AGVO. Gino, is that the right ticker? Because I'm typing that AGVO and I'm getting Buddha Steel common stock. Or is it? Oh, okay. Thanks, guys. Yeah, this one, Avago has been on our watch list for a while. It's doing some consolidation here about the 125 level. Again, keep your eye on it. Is the, expand this time frame just a little bit. Okay, is volume participating? Right now we've got momentum below the zero line. We've got the true strength indicator below the zero line. So this is kind of a toss-up kind of stock, I would say. Is we're getting kind of a bearish type, bearish. If this closed below the 8 and 20-day moving average, then we would be and engulfs this candle right here. We'd have a bearish engulfing going on, and so if 125 fails, then we'd probably look at a retest of that bounce off the 50-day moving average. And as you can see on the weekly chart, it's already busted below. And this gives a good example of this whole moving average. We get the move last week, then we drop below it. And there's kind of a rule that what David was sharing with me is you don't trade bullishly until you get back above the whole line. Yeah, so AMBA. There we go. Ambarella. Ambarella is up here testing this past high. It made a really great move from down here, and it is now, is it exhausting itself? A lot of the buying has in fact slowed down, but look, as we're pushing to make new highs, what is the volume doing? What is the momentum doing? What is the true strength indicator doing? What is happening on a weekly chart? And you'll see the same thing. Yes, we have enough momentum to push us higher. However, not necessarily to break out, and so we may be getting tired up in that area there. Doesn't necessarily mean it's going to reverse and move lower, but it will hamper the upward momentum and upward velocity of the stock. HZMP. Okay, HZMP, yeah, good volume. Nice little breakout. Yeah, our gap up this morning. But again, look at how far we're extended away from the moving averages. It's probably getting close to where it will want to start, either pulling back for a setup, because in this one it's a little bit different than AMBA. Look what we have. We actually have increasing volume as we're making new highs. That's good. Increasing momentum, and the TSI is above the zero line. So this is telling us that this is momentum that is pushing the stock higher, but we need some kind of a little consolidation or slight pullback to the 8 or the 20-day moving average, and then we would plan a trade off of that. I must keep an eye on my time because I promised my wife I would get her to the Air Force Base up in here shortly. Let's see. What would be a good entry point on Disney or ACT? Since I don't trade Disney, Dorothy, I could say there are no good entry points on Disney, but I wouldn't do that because it does show up on the, as you said, the IBD, big cap, and also the IBD 95 list. What would be a good entry point? As you can see, we're starting to pull back up here. I would say basically, looking for a bounce here off the 8-day moving average. It's going to run into some minor resistance at the it's already there at the 106.95, 107 level, and then a push higher from there. And so just look for some consolidation, or you can always draw your little trend line in there like that. And if it comes back and touches that or touches the 8-day, look for an entry at that point. ACT. ACT is shaping up looking really nice right now. What do we have going on here? We've got a hammer after it came down and tested the 50-day moving average. So depending on what our volume profile looks like today, and also check to make sure when earnings are going to be. Actually, earnings will be coming up on 5/5, so May 5th. And this looks pretty good, actually. Be aware that if it doesn't push back up through the 8 and the 20 with volume, that would make it suspect, and you're going to run into immediate resistance. Well, not immediate, but about 300. You'll hit your first level of resistance, horizontal resistance, after the moving averages. But this may be a good time to just check out, Dorothy, what's going on with this whole indicator. As you can see in the past, the whole indicator has dropped down, and as soon as it rebounded and closed above it, then that usually sets the tone for more up move, and that's happened numerous times. So it may be setting itself up for that. or also may consolidate between 190 and 290 and 295. And if it does make this break, be a great. I like it because it's a hammer, and so it's a lot of clues going on there that are good. Blue. Dorothy, Judy is blue. Never mind. It is a ticker for, Bluebird. Bluebird Bio. I'm not familiar with the stock, and here, come on. Okay, it's got, I always check it's got average moving volume above 675. Bluebird basically has done this little V bottom, pop back up, and is back up into the resistance zone. Again, this is one of those that looks a lot like some of the indices, right back up into a resistance zone, and so it needs to either break out or come back and put in a little handle type of pullback, what I call a flag, and then bounce from there. Or it could just go drive straight sideways. Volume is volume for on this almost this whole move up here has not been really supporting the move, and as you can see during that move up, the downside or the selling volume was always higher than the buying volume. So we need for volume to kick in if you do get into the position at a proper buy point. We need for volume to kick in to say, yeah, you were right. Okay, let's see. Moving IP, GP. And I'll come back to Kaddish here in a second, Susan. Again, nice move. Where's it likely to go? It's likely to go up here to either the 100 level and test up here, and or if we don't get some. This is showing a little bit of good buying volume above the average. You had a couple of days sell-off where the selling volume was a little bit higher, but it stabilized right there at 91. And so we'll see if it pushes on up to the 100 level. If we get a close above the 100 level, there's the old adage, if you get a close above the 100, then you're probably going to 120. And that's just one of those, it doesn't happen every time, but it does happen. It doesn't happen all the time, but it does happen. No, it doesn't happen every time, but it does happen all the time. Quite often, that's what happens, and that's what takes place. So if you're already in it, hang with it. Yeah, you can use the 8-day moving average as your trigger for protection. And so, Gina, you ask, what's the buy on the 8 and 20? I'm not sure what the exact question is there. There's several, and it was for a particular stock. Next line. Okay, let's see. Let's get back over to, hey, Gina, if you could send me a email on that question, I'll be glad to answer it. Oh, okay, on HZMP. I'll come back to that. Here's Kaddish. Kaddish is basically, looks like it's trying to stabilize between 60 and 64. And what's it showing us here? Volume is not jumping in yet. This is another one of those. We talk about this quite often, is when we see the momentum just kind of meandering, and the same thing with the TSI. This is telling us that all the noise that's happening here, nobody's committed to really jump on this stock yet. And so we're waiting for some commitment to start happening. How far is it going to run? I mean, it's not got a lot of range. And or volatility, but it may be a one of those slow movers that just follows this uptrend and continues higher. Looks a little bit better on the weekly chart, but again, we're seeing this drop off on momentum, and that may be seasonal. Oftentimes, as we start pushing towards the spring and winter summer months, some of the stocks will get a little bit less enthusiasm as the momentum drops off. Sometimes through the end of August into September timeframe. So I'm going to try to answer. See if I got everybody's. Yeah, Chris, are you on Thinkorswim? Chris asked a question. He's only getting one green line on the true strength indicator, so you must be. And any idea why the red curve line is not showing? Okay, I'll tell you what. Let me pop that up as a study real quick, and that way you can refer back to this. And that's on the true strength indicator, which is here. And basically what it is, Chris, is you have to go into this level here. TSI signal line is, in my case, is purple. My zero line is red. And you have to click here to have it show those lines. And then refresh, and they'll all of them should come up. And the rest of the way I have this set up, I have it set up an exponential 883. And so then you should start seeing everything that's up there. Okay? I'm going to do HZNP. Now, horizontal pharma. Geno, okay. The purplish line here is the 8-day. This color line here is the 20. This dark or color envelope is the on this one it's the 10% envelope based on the 20-day moving average. And the green and chartreuse line, or pink line, is that new hole indicator. And right now, as you can see, we are extended away from the 20, and we're actually outside of 10% away from the 20, which is oftentimes a point where things will correct and pull back towards as they revert back to the mean. So I'm going to do two more. Did that answer your question? Okay, cool. Thanks, Gino. UA. So I was waiting for UA to come up. UA made a really nice bounce here earlier in the week. Went up, increasing volume like that, increasing momentum like that. Although downside of it is it's still negatively divergent on the momentum, negatively divergent on the true strength indicator. What we may be seeing here is just a preliminary of a pre-earnings run, because earnings are on 4/21, which is about a week, a week and a half from now. And so that's what may be going on. But again, when you can find a stock like UA that obeys and respects a particular moving average line, this is where we try to make our money. It's basically the bounces off the lines and moving up, bouncing off the lines and moving up. And as you can see, by adding in this whole moving average, I think that's going to give us just that one more clue to say, yeah, let's go here. And so I'm like I said, I've been very excited about our vetting process on that, and look forward to start putting that out for the members. Let's see, I had one more. Starbucks, my buddy. I was really looking at Starbucks for a short trade this week, simply because normally stocks that split, after they split, they will go into a brief what's called a post-split depression. And what they will tend to do is give back a portion of the gain they made after they made the announcement they were going to split. And so here's earnings from last time, and it was around this area here where Starbucks said, oh, by the way, we're going to split, 2 for 1. And you get an immediate run up on low volume, as you can see. And that's just basically buying the news that we're going to split. Then you get a little bit of a sell-off and then a rebounce just prior to the split. And here then we get a sell-off here, a little bit of a tingle. But there usually goes in like 2 to 3 waves of buying after they announce the split. And I have not confirmed exactly when they announced the split, but I would say that part of these moves was due to that split. And so you can see we bounce back up, and oftentimes you will give back the amount gained or partial amount gained with the split. And so what's Starbucks doing right now? It hasn't started giving back any yet. As a matter of fact, it's actually looking like it was making a nice move to the upside. 49 is the target if you're looking to the upside. But if we get a reversal signal here, this would then become a lower high than here. And so if that reversed, then we may get that post-split depression that we were looking for. So, folks, that does it for today. Sorry if I didn't get to the particular question that you may have had. But I will be working on my taxes this weekend and also working on the traders report. So thanks for joining us. Hope you had your question answered today, and it's always a pleasure. Have a great weekend.